The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, looking good, Billy Ray, feeling good, Lewis. The first thing I posted in here today is the chart of the E-mini S&P, the September contract. We have now rolled over. There are no large gaps on your chart this morning. If you're seeing them, it's because they've rolled June to September, so you got to make that distinction. The easiest way to do it is just load your data for September and use that. Or you could still continue to trade June for another few days if you wanted to do that also. But the easiest way is to roll it over to the September. As you can see, the 2088 area is a 61% retracement of last Friday's low. And remember, we were looking at a market with incredible harmony last week, and that harmony has not been broken, in my opinion. It did exactly. I mean, we didn't turn down this week, but we didn't go screaming to the upside. We didn't take out those old highs in the Dow Jones and also in the S&P. So it's still, potentially there. Remember, our friend Norm Winsky from Astro Trends has alerted us to the big day coming up on Monday, which is a multiple outer planet retrograde with Neptune, and I don't remember the other one, but these are really big days on Monday or Tuesday. And of course, it can have a 1 or 2 day orb. So we're going to have some really rocking and rolling, I think, coming in here on Monday. Foreign markets are under a great deal of pressure. The German DAX, which trades very similar to the S&P 500, also tried to hold the 786 level. We were at the 618 in the S&P. The DAX was trying to hold the 786, but it in fact did break below that after holding it for about an hour or so this morning. So we're seeing extended weakness in the FTSE and the DAX, and of course all across Asia too. This is going to be really interesting, folks. There's something really big in the house. It was if you heard Andy Hecht and Tom O'Brien talk about it, it is what's going on in the interest rates markets. This is something that is really, really big. I'm going to start out with the long-term chart on the Treasury bonds. This is going back on a weekly basis, and you'll see what we're seeing here because this has a great deal of repercussions to all of us, and we'll see to see what's going on, and we'll see what's going on here. Okay, here's what we're looking at. This is the Treasury bond. You'll see the time between 2009 and 2012 and where we are now. That was perfect symmetry, and now we've taken almost 13 weeks to get back to a 78% retracement. That comes in at that 168 and a quarter, 168 and 3/4 in the market. So you want to watch that, very, very closely. But the main thing is that there's a lot of symmetry here. Now that's just the weekly chart on the bonds. Let's take a look at the long term on a monthly basis. Blow that up, and so you'll see it even a lot clearer. And believe me, folks, all this is technical analysis 101. It's just AB equals CD. As you can see here, you're looking at a 3 drive to a top pattern here on a monthly basis. It's a pretty big pattern. If you go back and look at 2012, you'll notice that we had another ABCD pattern into that, and then it went sideways for about 2 or 3 months, much like we've done here right now, and then it started to go down. German bonds, we'll take a quick look at those, and then I want to get over to the notes to show you those also. And here we go. Here's the German bond. You'll see it has this is just over a shorter time frame because I don't have as much data. I don't trade the German bonds, but they're viewed by everyone. But this is the pattern that we're looking at in the German bond. We have a 3-drive pattern. We have a 1.618 expansion. We have an ABCD, and we also have a shooting star candle. However, the shooting star candle has negated just a little bit because German bonds didn't gap down. They're actually up a tiny bit from where they were, but interest rates in Germany are almost at a little under 0.5%, I believe, as opposed to our 30-year bond, which is 2.4. Now, folks, let me give you a little bit of economics 101 as I got from Indiana University about 50 years ago. About 50 years ago, and that is take a $20 bill out of your wallet and look at it, and you'll see that it says Federal Reserve Note. Now, how that's formed is it is formed by a paper machine at the Federal Reserve where they print out these paper dollars. And what do? They buy United States Treasury bonds that are interest bearing, and they pay for them with paper money. And that paper money goes into our economy and it stimulates the stock market and other markets. Supposedly, that's what we want to do. Now, they've done this to the tune of $4.3 trillion as of last count, which was about 6 or 7 weeks ago. Where this money is going to go after this is going to be really interesting. Now, as bonds go up, the balance sheet for the Federal Reserve increases because they are long bonds, as are Chinese, and also, the Japanese have a great deal of number of these bonds. So this is a big, big scheme that a man named Charles Ponzi up in Mr. O'Brien's neighborhood in Boston back in the 1930s promulgated it. And then, of course, Mr. Madoff from I can't remember Madoff's first name. Son of a gun. Paul Madoff? What was his name? Richard Madoff? Boy, time flies. Should never forget that guy's name. Bernie Madoff. Thank you very much, Mr. T. Anyway, that's what, what a terrible life he's had, lose a son to suicide. I mean, my goodness. Okay. Anyway, let's move on to the next things I want to show you some charts about this because that's really where it's coming from. If we look at the Treasury notes, this is the long-term chart on the Treasury note. And folks, this is all technical stuff. This is not fundamental things. I'm just looking at the sum total of the buyers and sellers and where the money is going and that type of thing. But you'll see this over the past 6, 7 years. We've had perfect time cycles between the right shoulder and the head and the left shoulder. You'll see all of those are just about perfectly symmetrical. The ratios come in really nicely. We've had an ABCD pattern forming. So all of that tells us that, we are at some type of a major crossroads here from a technical basis. Okay, we're going to go back to the notes again when we come back, 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I wanted to show you the long-term chart on the notes going back the last 20 years. As you can see here, we are completing several major patterns from this level, and it really interesting here because we've had a major ABCD from 1998, from 2007, and as you can see now we're completing a Gartley pattern up in this area. And if you remember Gartley from his page 222 in his book, he said, look to sell that first ABCD correction after a top has been put in, and the top was put in 2012. So we're up at this area. The problem that we have here that was really emphasized by Andy Hecht and also by Tom O'Brien is that we are in an era of declining interest rates, and that nothing's to say that we're the last kid on the block. We're the tallest person in the land of midgets, because we've had that's a quote from Steve Banger. I absolutely love that quote, along with the man that in the land of the blind, the one-eyed man is king. But if you look at this, we could easily, at 2.4% in our 30-year bond, we are 2 full percentage points in yield more than is happening in Germany, and and in Japan. Believe it or not, folks, 15-year bonds are negative interest rates. In other words, you have to pay them for holding your money for 15 years. I'd rather keep it in my mattress than let's pay some bank for holding it that might not even make it. That doesn't make any sense. That's why all this stuff does not make any sense to me. Okay, we've had a question about the crude oil, and we're going to bring it up here and take a look at it. As you remember, we were talking about that just yesterday, and the crude oil was trading up around that $51 barrel level. We're a little under 50 right now, as I recall. So it's come down just a little bit, not too much, a couple of bucks or so. Doesn't really mean much as of yet, but that is a big pattern that's occurred over 2 months period, the three drive pattern, and it hit the exact 1.618 level at that 5160 level. The high was, I believe, 5163. So until we get above 5163, we're in a corrective mode. And the last correction that we had, took it down $9. Excuse me, let's try that again. Took it down $4 a barrel. That was from 50 down to, let's try that again. That's only $3 a barrel. From 50 to 47 was our last correction. That took 5 trading days. And so we should get at least a $3 correction. Would take us to around 48 and change would be my guess here as the first correction in the oil. But remember that 51 level, folks, is a long-term Fibonacci number, and that's what we're looking at. Yes, we're trading July oil just below the $50 a barrel level. So we'll see. I'm going to cover gold here just a few minutes, and we want to get through it. Basically, what I wanted to do this morning was to try to emphasize the importance of what's happening in the interest rate market on a global basis and also here in the United States with these patterns that we're looking at. Now, I really respect Norm Winsky's work, as you all know, and anybody that listens to the guy, you got to pay attention to him because he's pretty much spot on. And we've got these really big aspects occurring over the weekend and on Monday, and so that's the time if you want to be looking to get on the short side of the bond market. Then that's when, and everybody's on the other side of it. So you want to be able to wait and see, what's going to happen. If we look at the TLT, which is the ultra long bond ETF, and that's another thing about those ETFs. I never did trust those darn things, but they're out there. So you gotta dance with the lady that brings you, or the the lady that you took to the dance. But as you can see here, we have this same type of pattern here in the ETF that we do here in the bond market. But this is it's not the chart pattern itself is not the same because the ETF looks actually stronger than the actual bond contract does. So there's a little bit of a discrepancy there. But if you don't want to trade the 30-year bond because you think it's too wild, which I certainly don't think that it is, but then you could certainly trade, the ETF. That's actually the TLT is actually for the I think it's a 20-year. That's what it is. Now we take a look at the TBT, which is the inverse of this. We'll take a look at this one. You'll see that we have the inverse of this occurring, and we have this butterfly pattern forming down here about another half a point lower. That would get us up to this almost to the 169 level in the bonds, which I think that we could get to. And anything above 171 in the bonds, folks, you could see, Treasury bonds maybe do like the rest of the world is doing and get down, to near zero interest rates and possibly, even minus interest rates in Treasury bonds and Treasury notes. But, I better cut my mouth shut because then every time I open my mouth and I make my opinion about something, I always get an email from somebody that is very disgruntled. We lost 2 of my customers this week here in TFNN about comments that I made, and one was about astrology, the other was about something else, and they were not happy with me, and they realized that, I'm doing this show. I have my right to give my opinion also. You give me your opinions, I'm going to give you mine, whether you like them or not. But what I see, it was about Mr. Trump. Okay, and let's not worry about that. The main thing is that this thing with quantitative easing is going to come around and bite us on our kabuki. It has to, because it doesn't make any economic sense. It really does not. It's like trying to pay your credit cards off with more credit cards, and that's all it is. And when it ends, and I don't know how it's going to end, and I think that's going to be the canary in the woodpile or the black swan. But someone's going to have to yell uncle along here somewhere. It's either going to be Japan or Germany or the UK or maybe even the United States. I don't think it'd be the United States because we never back down. But Anyway, that's how I see it. There's something wrong in the economic picture, and I'm an old Keynesian guy. I believe money should be backed by gold and stuff. So we'll see what's happening. And you stop and think at the debt that we have for our students, with student debt is beyond belief. I mean, it's just really not very good. But we'll see. We're going to be okay no matter what happens. But how the ending is going to happen, I don't know. All right, let's switch over to gold, because this puppy's got a real shot here, folks. I want to go over this chart with you. We did yesterday. I've had several requests about it anyway. This is the long-term monthly chart in gold. And folks, I have traded gold almost every day since it started trading back in 72. The only times I've ever missed it is when I'm traveling or I'm in the hospital for being sick or something. But other than that, I trade it almost every day because it's a really good trading vehicle. And I just think it's got this really good chance here, because this pullback that we had at 1030 per ounce was a 50% retracement. So we're going to take a break here, and we're going to finish this gold chart when we come back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I want to share with you some personal history of my trading. If you go back and look at this chart from gold back in January 20th of 1980. That was the high day. We were limit up. As you can see, the big gap on the way up. I think silver was up 22 limits in a row to hit 49.70, I believe. No, $54 an ounce, as I recall. But gold hit 865 that day. It was January 20th. Every option was limit bid. I mean, it was just, oh, we got a caller on the line. Bill from Florida. Bill, are you there?
I am, Larry. Good morning.
Good morning to you. What can I help you with, my friend?
My question is, it's maybe a bit, I'm wondering what you think the chances are of us ever getting back to tying the dollar to gold and to be on a gold standard, and what would that do to the Forex market?
I don't think it would have much effect on the Forex market because they're dealing with goods and services all over the world, but it would have an effect on money supply of the central banks. They would lose control, I believe. And I don't think it will come from the United States, Bill. I think it'll come from China because they probably have more gold holdings than we do right now. And if they were to do that, the yuan would probably overtake the dollar as far as stability. We need something like that. When Nixon took us off the gold standard, in 72, breaking the Bretton Woods agreement, that set all this stuff in motion. And now I think we're in the last leg of it, but we'll have to wait and see.
Yeah, no, it's created it's a mess, Larry, obviously. So It's nice to hear you trade gold almost every day, and I assume you're trading the currencies almost as often as well?
I trade the currencies more than I trade anything else. Hardly a day goes by where I don't trade the euro and the yen or both. And gold, I probably trade 3 or 4 days a week because, it trades so nicely intraday, and the euro is the easiest predictable of anything I've ever seen. And, those are the ones that I try to focus on personally that I look at.
The euro dollar, Larry?
The euro versus the U.S. dollar, not the euro dollar.
Yeah.
Euro dollars or U.S. dollars held abroad.
No,
those don't move at all. I'm talking about the euro versus the U.S. dollar. And everything I do, Bill, is versus the U.S. dollar, whether it's Canadian, the Swiss, the Australian, the British pound, the yen, euro, all of them are against the U.S. dollar.
Yes.
Because that's where the real volume is.
Larry, are your charts, I know you use Ensign, are those customized for you? Because
No.
Okay.
No, I don't do anything customized. That's over my pay grade, partner. No, I keep it as simple as possible. And, because I just look at the patterns and, try to make sense of it. Sometimes they work, sometimes they don't. But that's really the good. I've had a relationship of over 30 years with the Ensign folks because they came down to watch me trade many, many years ago and wanted to build some of these patterns into their system. And that's how it all started, the ABCD pattern and the Pesavento patterns with the ratios and the Gartleys and the butterflies. They put those in there. But until you understand what they mean, it doesn't really do much to look at it.
Sure. No, and hopefully I'm getting there. Are you entering trades on 15-minute charts, Larry, or using the shorter time frame? Yeah.
No, but what I do, Bill, is I start out with a 4-hour chart. That goes back, gives me 6 weeks to 2 months, so I can see really clearly the patterns. I look at dailies too, but the 4 hours is what I really like. Then I drop down to an hour and then to 15 minutes, and as I get ready to enter the trade, I'll go down to a 5-minute chart to make sure I'm seeing something that is, as clear as I want to do. And then after that, I just put the order in. I take the monitor off. I take it off my monitor. I don't even look at it anymore. My monitors go off they turn off every 15 minutes, so I'm not able to watch them, and I do other things. But the beepers are on. Like if gold hits, 1280 today, I want to know where I am and stuff like that.
Wonderful. Terrific, Larry. Thank you very much.
Thanks for calling, Bill. I appreciate it.
Bye.
Okay, folks, I was talking about what happened in 1980 on January the 20th. All options of gold from January all the way through December were trading at limit up, which was $50 an ounce. Back end gold, January, December gold of 1980. Remember, this is January, so it's 12 months out. December gold was trading for, I believe, 1105 an ounce limit bid. And we were trading gold, but it was about $57 higher. In other words, because cash gold had no limit. So February gold had no limit, and so it was about $7 more than the limit. And I was watching this, and I saw a 3-drive pattern on the cash market, and so I called the floor. We had to call our orders in. And I called Goldberg Brothers. They cleared all our trades at Drexel, and I got the young Goldberg, the young Goldberg, and his Richie, and he was the youngest one. And I told him I wanted to sell one Dees gold at the market. It was limit bid, and he said, "Oh, what are you doing?" He said, "You're one of our best customers. We don't want you to lose any money. Don't do this. And this is crazy. It's limit up." And I had made a lot of money in January on the long side, and now I was just taking a flyer on something is all I was doing. And he was telling me, I said, "Richie, how long you been on the floor?" And he said, "Just about 9 months." I said, "Okay, Richie, sell me 2 instead of 1. And he got really angry with me. He said, "Why are you doing that?" And I said, "I'm going to try to teach you a lesson here." I said, "You don't know what you're doing, but I think that I do. Let's see who's right." He says, "You got it." And he said, just a minute." He came back and he said, "All right, you sold 2, wise guy." And I said, "Okay, thank you very much." And I said, "Richie," I said, "before you get off the phone," I said, "I want you to buy 2 of them limit down." And he said, "What do you mean buy 2 of them limit down?" I said, "Yeah, I want to buy them $100 lower." He said, "I can't put an order in that." "Hey, look," I said, "if you took my order limit up, you have to take my order limit down." He says, "Okay, I'll do it." And I got a call back about 3 minutes later from his older brother, and he was laughing. He said, "You just took my little brother and turned him upside down." And he said, "I hope you win on this trade," he said, "because he thinks that you're the stupidest guy in the history of commodities." And an hour later, I got filled, limit down. And I was happy with that. I went out and I bought a very nice car for someone, and that was it. And someone was me. Anyway, that was it. There was a lot of other stories in there, but those are just some of them that I had in that gold market, but it was fun. But I do believe, folks, if we can get gold above that $1,400 level with a little bit of gusto like we've had so far, and if we start to accelerate, just look what happened back in 2009 once we started to accelerate, when we went above $1,000 for the first time. You see that? It just took off, and it went $900, almost doubled in price. And this measures to 3220 if it were to get that far, but we'll have to wait and see. And I am bullish gold and silver. I have been for quite some time, and believe me, I have a very, 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 very small position. I mean, it's not enough to even make anything. Now we're breaking down on the S&P that we posted when we started. We said that 2888 was a 61% retracement. We just opened, and we're just touching that level right now. This is important, folks, because if this starts to fail, we've had a major turn here possibly. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we were talking a little bit about the gold market before, and gold just looks bullish. That's basically it. That's really all you can do is to see that it just wants to work higher. Once we clear the 786, which is around the 1285 level, then we're looking at the next level, and then we'll be able to do that. That's really what I'm trying to get across. It just cannot do that. It's just there's no other way we can work it around. Trying to do two things at once. That doesn't work too well when you're trying to do a radio show. I was putting an order in because we're at a critical level right now in the gold, because I believe we're right near, just give me 1 second here. We really need to clear this 1280 level here in the gold, which I think we're going to without too much trouble. But it's going to be definitely interesting. That 1282 is the this thing's going higher. My goodness, we've rallied $77 an ounce in 10 trading days. Anything above 1285 is going to get this thing moving. And if we look at the 382 retracement that we got back here on May the 26th, that was over the holiday. That ABCD structure takes you all the way up to 1458. And believe me, if we went from 1040 to 1300, we can do that very easily. That's just $240. We've already given $77 of it in 10 trading days. We can make that very easily, and this is going to alert the world that something's not right here. And the gold stocks are already telling you that's what's happening. So keep an eye on this gold, folks, and always buy some silver. Always buy some silver rounds. You can't go wrong doing that. They're beautiful coins. They have a good historical value and everything. And to keep in mind. Oh, one other thing I wanted to mention, we do have a big grain report today. I think it comes out in about an hour or so. It's going to be quite interesting because, we're in a really strong bull market in some of these things, so it's going to be really interesting. Oh, we've got a caller from Singapore. I believe it's William. William, are you there?
Thanks for taking up my call, Mr. Pesavento. I think you are really spot on the goal. I would like to ask you the questions. I think I always hear you talking about the silver and gold, and you always look at silver at the same time when you look at gold. Could you, share with me why you need to look at silver?
William, my whole start in this whole business started in silver back in 1964 when I first
Okay.
started to accumulate silver coins and silver certificates. So I still have a strong affinity to it. And then during my years at Drexel, it was really good to me. But the real reason I do it here at TFNN, it protects people. If I tell them to buy an ounce of gold at 1280 and it goes down to 900, they've lost, $300. If they buy one
Right.
ounce. But if they buy an ounce of silver and it goes from, 15 to 13, they don't lose very much. But the value of silver, if gold takes off like I think it's going to do, silver could easily double or triple or quadruple, from where it is right
Okay.
now. So it's a very low risk, and I love the beauty of the silver coins. They just
Right.
have a luster to them that is, really really nice, and I just like them quite a bit. And as a matter of fact, I remember you gave me a set of beautiful Singapore silver coins that Sarah and I keep in our safety deposit box.
Yes.
So, yeah, that's why I like silver.
Okay, okay. I was thinking there's certain correlation, when you trade that you need to be careful about the silver, So that's why my question is that. But it looks like the gold is really moving. Looks like it's going to go past 1280, and especially your gold money chart. It looks so interesting that I hope that you really do the ABCD patterns. Yeah.
Well, that I'm going to do the ABCD on the long-term monthly chart here on gold over the weekend because I'm trying to cover, what's happening in the interest rate markets. Because William, see, back in 1980 when gold made its high, we were having interest rates were roughly 13% for Treasury bills. It was ridiculous. And Treasury bonds, they were yielding, I believe, 14% also, and now they're down to almost nothing. So that's pretty much what we're watching here.
Right. Okay. Thank you very much, Mr. Pesavento. Have a great weekend.
Okay. Thank you very much for calling in, William. Always like to talk to you, my friend.
Yeah. Thank you.
Okay. You bet. All righty. Okay, let's get back to the gold and the silver. The ABCD pattern that I'm talking about is the one that extends from the B leg, which would be at 1932, and the C leg is down at the 1030 level. Then you go from your bottom that you had 17 to that last bottom, and that's going to take you to $2,700 to $3,000 an ounce if it starts to run. So keep in mind, the gold and silver are very emotional, folks. And when you see, I got this written down, I forgot to do it. When you see stories about George Soros and Druckenmiller and all these guys doing what they're supposed to be doing, be really careful what you're listening to, because what happens is what they do is not always what they say. So keep that in mind. So that's the main thing that we're watching here this morning. So we'll keep an eye on this as we go through, and we'll do one more at a time. Okay, let's take a look here. We're getting really close to that 1280. We're only $2 away in the gold market, so we'll watch it. So far, we've held the 61% retracement in the September S&P E-mini. We were looking around that 2088, and we got down to 2086.5. If we get it above 2092, that would probably confirm that that's going to be holding, and we'll be able to see if it's going to be if it's going to be the right thing to do on the long side. Remember, it's a Friday, in an up week, in an up month. So it's going to be hard for the market to close down really hard today, but that's neither here nor there. Okay, we had another question here about the crude oil. What would be my first objective on the crude oil that we looked at that $51 a barrel level? And as I mentioned, the last correction was $3, and so that would take us down to around $48 a barrel, and that's there's down $3 from that level. But if this is the bigger ABCD, remember we went from 26 to 51. We rallied $25 a barrel, and a 38% retracement on that is going to take you all the way down to $44 a barrel. So that's the potential that you have. And remember, the fundamentals in the crude oil have not changed a whole lot. I mean, at least they tell us that. But those are the things that we're watching and we'll notice if that's going to be a factor or not. But we've got all these big astral things that are going to affect the bonds and oil and stocks also coming in on Monday, and from our good friend Norm Winsky, so we'll be able to really watch that. Now, my alert just went off in the Treasury bonds. I see that we hit 168.25. That is a big 786 number in the bond, so keep an eye on that. But it's a Friday. This market's running. I would sell here. I would wait until Monday. You don't have to pick up a falling knife.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, to recap today's show, the thing to really pay attention to is the fact the interest rate market is accelerating here. We have the German Bund making new lows in interest rates. In other words, they're paying less than 0.4 on the 30-year bond as opposed to our 30-year bond, which is 2.4%. And you'll notice that we posted the notes in the bonds, long-term and short-term, to show you that we are completing some major patterns in here. And as our good friend Norm Winsky pointed out, we do have this big astro date coming in on Monday, so we should have some fireworks, moving along the rails here. The U.S. dollar is holding up relatively well. We've sold off a great deal in the euro the last 2 days. as soon as we hit that 61% retracement at the 1114 or 1140 area, we've broken quite a bit, over 200 pips in the euro in just a matter of a short time to get down in here. And the pound is even heading lower. It had a really nice potential to bottom at 144, and it gave up the ghost. And we're still looking for the pound to make somewhere around the 137 to 135. It might be related to the Brexit that comes on June the 23rd. So this is the big month for cycles, both astro and geometric cycles. So we want to watch those very closely. I posted the last two charts I wanted to post was the NASDAQ showing you that it stayed at the 786 all week long and most of last week. And now I wanted to show you that the Dow Jones, even though we did hit the 18,000 level, it did not violate the 78% retracement from our high in April. So all of these patterns are still very, very similar to what we posted on Tuesday. So it's very, very close, to something pretty dramatic happening. And we will probably know by Monday which direction, because we could easily turn positive here and, go up and make new highs. But we could also have one heck of another break like we did in January. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.